Caruso Cabrera.
I'm Liz Clayman. Power Lunch is next with Sue Herrera and Bill Griffith.
Hi, everybody. Welcome to Power Lunch. I'm Sue Herrera. My partner, Bill Griffith, continues on his vacation. Let's get you an update in what's ahead on this hour of Power Lunch. Just moments from now, we're going to get the release of the Philly Fed data. Steve Leisman standing by to analyze what this means for the future of the economy and the Fed. Then we take a look at the upside of the downturn in the housing market. For many of you who've wanted to buy a home for a long time, you may have been priced out of the market. This may be a perfect time to try and get into either your first house or move up into one of those larger houses. So there is an upside, and we'll talk about that, and timing, which could be critical. And then Walmart and politics. It's not necessarily a link that you would think, or perhaps is very obvious, but there are a number of Democratic presidential hopefuls who are hitting the trail ahead of midterm elections as well. There are a number of Democrats out talking about lack of economic growth, the lack of economic strength in the middle class, and they're blaming it not necessarily on the Republicans, but rather on Walmart. We'll talk about that. The Philly Fed data survey is out. Let's go to our senior economics reporter, Steve Leisman, and he's got some analysis. This has been a very data-dependent week, Steve, so this one is, kind of another clue as to how the economy is doing.
A data-dependent couple months, I think, Sue, is probably the best way to put it. This is a head-scratcher here, a very strong Philly Fed index coming in at 18.5 versus a Cnbc Dow Jones forecast of 8. Some of the other forecasts or consensus surveys were a little bit higher, but this one, the actual number is higher than all of them at 18.5. New orders up 15.7. That's a strong number, but inside the number, looks like there's a lot of weakness to me. Employment fell to 8.2. Prices paid, by the way, from an inflation standpoint, also declining to 45.3. Business conditions 6 months out, that falling in half from 15.4 to 7.4, and CapEx plans also falling. So here you have a very strong headline number, a strong new orders number, which indicates good times for in the coming months, but some of the internals are not very strong inside it. So I think this is going to be a head scratcher. It does not, on an index or overall basis, confirm the trend we've seen in the Empire State Index and in the overall national manufacturing surveys, which were for a moderation in those indices. Sue?
Let's bring Rick Santelli in. And Rick, from your market's perspective, from the bond market, what's the key in this report? As Steve mentioned, it's kind of a mixed bag. It seems like inflation, at least in this particular report, moderated a little bit. That should be bullish.
No, and it is key. And, it's always kind of a difficult task to interpret some of these regional Fed numbers, especially when they follow PPI and CPI. And specifically yesterday, some of the debate as to which parts of that report really looked good and which parts didn't. If that wasn't looked at in a certain light by the treasuries, this part of the report on inflation today doesn't stand much of a chance. But I have to tell you, the knee-jerk reaction on the strength of the headline number did push rates up just a little bit. This market is almost priced to perfection. Rates have fallen dramatically since the end of June. Is it all priced in is really the bigger question.
What do you think, Steve? Is it priced in? I mean, we've had a lot of data this week, and a lot of people were speculating yesterday about the prices paid component, but also about business conditions. There was a lot of buzz about business conditions.
It depends on what you look at, Sue, and what your outlook is. If you Kaufman, we're coming back on this tomorrow, Santelli. We're going to debate Kaufman tomorrow.
Good, terrific. We look forward to it. Gentlemen, thank you very much. Well, Wall Street still holding on to an advance. A lot of that is because the oil market, which we will continue to talk about throughout Power Lunch and focus on a bit later in depth, is on the downside once again today by better than $1. And that has allowed the Dow Jones Industrial Average to add on to an advance today of 19 points, 11,346.33. The NASDAQ is up about 10 points, 2159.33. And in terms of the S&P, the last trade there is up just 0.1% at 1296.66. Crude oil is really a big focus today because it's down another $1.50, and there are many people on the street who say we could crack to the downside the $70 a barrel mark. More perspective on that in just a moment. Unleaded gasoline last trade is decidedly below $2 a gallon, $1.92 now, off 3%, and we're off almost 3% on natural gas as well. Let's get some perspective on the markets. Our team coverage begins with Scott Wapner at the NASDAQ, then Melissa Francis at the NYMEX. Bob Pisani will lead us off from the NYSE.
Thank you, Sue. And one of the reasons this Philly Fed can be a head scratcher is that the main headline number is created independently of the sub-indexes that are below it. So you can get a number that looks really strong, and this number looks really strong. Then you can get elements of the sub-indexes down below it that look relatively weak because they're compiled separately in a different manner. So it's part of the problem with the way the Philly index is constructed. Unless the number is strong, futures moved down just about a point on that news and have moved back up a little bit. Remember, too strong creates concerns again about the Fed continuing to have to raise interest rates. Let's take a look at the markets today. The bottom line is this. We have a modest rally continuing after 2 very strong days, so that rally is holding up quite well here in the middle of the day. The Dow and the S&P are remaining at 3-month highs, and that is what is important here. We have got an uptrend going finally after a couple of months here where we have had a series of failed rallies. That has changed around. As a result of this, there has been a real sentiment change on Wall Street this week. In fact, the change in attitude has been noticeable since the CPI came out yesterday here. What we've got here is cyclicals coming back rather strongly. Retailers, for example, transports are up 6% this week. That's one strong move after the big moves down in May and June. The NASDAQ and the tech group is up 5%. Where are they getting the money from? They're selling oil stocks. Those are the ones that are down about 2.5%. Couple of quick stocks. You want to talk about a change in sentiment? Now, you look at Barnes & Noble. People who follow this, it's not a particularly great story here. Barnes & Noble's sales are down 1%. Sales were down 1%, but they had a pretty good top line because they had some cost-cutting measures. Look at this. The stock's been selling off like crazy the last 3 months because people figure consumer slowing down, less book sales. Last couple days, it's been moving up because the sentiment has changed. If this number would have come out 3 months ago, this stock would be down very strongly today. That's what I mean when I talk about sentiment change. Quickly, let me bring you up to date on Merck. They lost another Vioxx suit. A retired FBI agent down in New Orleans suffered a heart attack after taking Vioxx. The jury said he's entitled to $50 million in compensatory damages. They have not had any particular comment from the judge on punitive damages. They said Merck was negligent for failing to adequately warn the man about the risk. Merck has won 5 and has lost 4 of these cases right now. Let's go over to Scott Wapner. He's standing by over at the NASDAQ. Scott?
All right, Bob, thanks so much. Our stock of the day, no big surprise. Hewlett-Packard, of course, off of these blockbuster earnings numbers, up 4%. Another 52-week high for this company, getting upgraded at Citigroup to a buy from a hold. Bank of America also raising the price target on HP to $40 from $38. The flip side, we're going to talk about Dell because, as we know, obviously reporting earnings after the bell, this stock is up and on a little bit of a good run the past few days. Perhaps the bad news and also the expected earnings are already baked in to these numbers. As Jim Goldman mentioned a little bit earlier, the company expected to show the slowest revenue growth in 4 years. The stock already down 24% this year. In fact, let's take a look because yesterday we were asking this question a lot. Is tech back? Well, let's have a look at some of the big cap techs and see how they're moving on the session today. Kind of a mixed bag there and some individual news. Oracle hitting a new 52-week high today. Something coming out and saying that Apple still has more than 75% of the digital music player market. Also a report that Apple is shopping for a third notebook manufacturer as sales of its notebooks have picked up there. So you get a look at some of the real big cap tech names and see how they're doing today. Let's talk about China.com. The stock is up more than 9%. That online game and internet service provider striking a deal with Google. It's a strategic partnership where Google will share search engine technology, branding, and advertising. And finally, Sears Holding. We do have it at the end there. It is down 4%, beating by 7%. Same-store sales at Sears and Kmart down. Some talk that this company is looking for acquisitions, and perhaps that's the reason why this stock is down. Let me send it downtown to Melissa Francis at the NYMEX. Hey, Melissa.
Thanks, Scott. Well, crude right now heading towards $70 a barrel. Remember, back on July 14th, it closed at $77.03, $7 higher just about a month ago. OPEC saying today that they don't see any need. The president saying he doesn't see any need to cut production over the next year. The cartel cut its demand forecast, though, yesterday. Another factor dragging down crude is gasoline. It is down about 3% today. Analysts say they see demand for gasoline finally waning,